still further to travel?
Well, yes, we actually initiated those reforms, very difficult ones, in 2014, fiscal consolidation, and based on those we have right now, believe it or not, third year in a row, fiscal surplus in our budget. We have the growth rate of GDP 4.3% last year, which is the highest in a decade. But what's important to me to emphasize, going along with my predecessors here, the fundamentals in the emerging markets have changed. So just 15 or 10 years ago, you talked about markets with low-cost labor. You talked about markets with traditional agriculture. Now, right now, you're talking about leaders in innovation. Look at what Alibaba, for example, in China is doing. And those game changers, of course, the spending patterns which are changing, increase in wages. Those are the game changers for the developed markets to understand when dealing with the emerging markets. And in case of Serbia, following those reforms, we do concentrate on traditional industries, coming back to what you said. So we opened 180 factories in the last 5 years, just basically keeping this basic industrial base in order. But also we're talking about renewable energies, tourism, entertainment, etc. Just I'll finish with this. The previous speaker, Sultan Al-Jaber, who is co-chairing the investment committee that we have as the Republic of Serbia and the United Arab Emirates. The last time we were meeting a couple of months ago in Belgrade, most of the meeting we talked about artificial intelligence, robotics, so-called fourth industrial revolution. I think for us, of course, working on the structural reforms and everything else, we cannot miss and we should not miss this opportunity to become really the leaders and part of the global economy in the 22nd century. Sure, I'll answer that question. Just coming briefly to your point of multilateralism, I strongly believe we need multilateralism today more than ever. The world has changed, but if you just remember, the biggest growth or the biggest wealth created was after the World War II and for the next 70 years. And we all talked about the global economy. And nowadays you have so many topics like digital transformation, climate change, exchange of ideas, etc., that simply push us to work together. Two things I would just like to add. I'll finish with this subject. We need to see if the influence can be widened among more countries, because the world today is not the same as it was in 1945. And then again, also, I think the wealth needs to be spread across the countries and within the countries in a more different manner so that everybody feels the benefits of the globalization to push the world forward. Coming back to your question, listen, Serbia is on the firm EU path, and we hope we're going to become the full member of the European Union. But then again, we have so many free trade agreements that we are very proud of and we use to our own benefit. We have the free trade agreement, of course, with the EU. We have the preferential status with the US. But at the same time, we have the free trade agreement with Russia, with Belarus, with Kazakhstan, with Turkey. And I think we're the unique country in the world. We have a couple of very good agreements with China for exporting our agricultural products. I mean, we cannot produce a small bit of what can we export. But then again, you also have the record inflows of FDIs in Serbia, simply because by investing in one small country, you can cover 3-4 billion people's market. As far as China is concerned, we are strongly part of the One Belt, One Road initiative. A lot of money has been invested through this initiative into Serbia. But I would just like to add one point, and I'll finish with this. So apart from Chinese investing in infrastructure, there are more and more private deals that we see. 2 years ago, the Chinese company acquired the biggest steel mill in Serbia, which is the biggest exporter at the moment. Last year, they acquired the biggest copper mine in this part of Europe, 1.6 billion euro, open competition, so no G2G agreements. This year, we had the groundbreaking ceremony just 2 months ago for the biggest tire manufacturer, Linglong Shandong, $1 billion one. So Chinese are coming. I don't think you can avoid any relationship with China in that respect. You should just find a way to get benefits out of this cooperation.
But how does that go down in your conversations with Brussels then? Because sure, there's Chinese money all over Europe.
We have no, believe it or not, listen, you always have to take care of your own national interests. We talk to Brussels. We also have the IMF agreement in place currently. So, if you guys want to invest more into Serbia, let's do it. But if you are slower or if you are not willing, we have to diversify our investors base. I mean, our interest is more employment, biggest wealth in our country, higher wages. If you cannot do it through one source, as you said, you're going to do it elsewhere. That's why we have very good cooperation with other countries, with emerging markets, with China, Arab Emirates, etc. But also, bear in mind, our biggest trading partner is still the European Union. So from that perspective, we have no doubt. Still, you have to diversify, just trying to find your own way to move forward. Well, I'll tell you what we did last week, and then we can all draw conclusions from there. So last week, we issued a Eurobond for the first time after 10 years, after 9 years, I'm sorry. €1 billion, a 10-year bond, and we managed to get the lowest coupon ever, 1.5%. And just to remind you that Serbia is still 2 notches below the investment grade. So we try to utilize the low interest rate environment, but that happened only because we did or finished very difficult reforms since 2014. Our macroeconomic indicators, all of them are very good. I told you we have the surplus in the budget for 3rd years in a row, the growth rate 4.3%, the highest in a decade, etc. But I'll tell you one thing. Pretty much during the roadshow, we were in the US, we were here in London as well, Frankfurt. There was one ratio that everybody was concerned from the analytical perspective, and that was public debt to GDP. More and more people just inquired about that, and we were fortunate that we decreased this ratio from 78 in 2015 to around 50, 51 nowadays, and we are just going to decrease it even further, which shows how priorities change. I agree with my colleagues, but I think the monetary policy in a way has certain limits, especially in this low interest environment, and that the fiscal policy will become more and more important in years to come. But then again, you have to preserve your debt level in case there are external shocks. The only way you can survive and move forward is if you have enough, if you have not that much debt in your balance sheet, you can react in a proper manner. First of all, just to finish what I said a couple of minutes ago, the proceeds from the Eurobond we issued, we completely repaid the bonds issued in dollars a couple of years ago. So we decreased the exposure as far as the public debt is concerned from 26% to 22% as far as dollars are concerned. And you know, dollar usually is not a natural hedge for European countries, so that's why we did it. So coming back to your question, the fundamental changes that we did in our economy, which is right now based on the investments, both private and public, as well as the exports, is something that we think is the way to move forward. I agree that we need to increase domestic spending, but basically you can only increase it if the standard of living rises, so you need to find sources of growth. The key for us in the medium term is how to continue growing. We respect all of the, and we are aware of all of the global challenges, whether things will happen in the Middle East or not, trade war between China and the US, etc. But we are simply concentrating on our macroeconomic data, on our growth, and or on ratios that I just mentioned, for example, public debt to GDP. I think in the environment of low interest rates, the monetary policy has certain limits, and that's why I think the key fundamental fiscal policy issues are key to simply cushion any economy from any external shocks. Of course, if they happen, you do bear some consequences, but you are stronger if you don't have that much debt on your balance sheet, and or if you are capable of growing further through the diversification of your investors' base.
Yeah.